If your multinational group is making a revenue of more than 6,400 crores INR, then the tax authorities are looking out for you. This is an important topic which a lot of people miss out to check whether the group entities, or for that matter the Indian entity, is compliant with respect to this regulation. So what is the compliance we are talking about? Under section 286 of the Indian Income Tax Act, the group reporting has to be reported under country by country reporting requirement. It is not optional, it is mandatory. As per country by country reporting, the group has to look for whether the consolidated revenue in the previous year crosses 6,400 crores rupees. CbCR is India's equivalent to BEPS Action Plan 13. So what is CbCR targeting? The tax authorities want to ensure the profits are not getting shifted to a low tax jurisdiction. The profits are being taxed at the jurisdiction where the economic activities are taking place. For example, there are two companies which have been incorporated, one in US which is predominantly carrying operational activity, and another one in Netherlands with just a registered office address. If the Netherlands company is going to raise a royalty on US company, then there is no substance or form. Why? Because the economic activity, or predominantly the operational activities, are being carried out in US, and Netherlands company doesn't have anyone. So that is why there is no substance or form. The tax authorities would want to see the full map of groups' economic creation and spot any mismatches instantaneously. What happens if you don't comply? The penalty starts with rupees 5,000 per day and goes up to 50,000 rupees per day. And these penalties are even before the start of any scrutiny or audit from the tax authorities. An Indian parent company needs to ensure you file Form 3CEAD to report your CbCR. And if you are a subsidiary of a parent company having a registered office outside India, then you need to ensure you file it in Form 3CEAC. These are the two important forms which one has to clearly report. CbCR requires a lot of data to be submitted. These data have to be consistent with the data which has been already submitted in transfer pricing report. What are these data? These data are revenue, profit before tax, employee headcount, assets, etc. CbCR isn't just a compliance. It is a powerful internal tool. It helps you to align with global tax position and understand the risk areas. So, are you CbCR ready? Kindly ensure you have the right systems in place to pull data from every jurisdiction and ensure that you file it on time. In today's tax landscape, being transparent is not just a good practice, but it is vital for survival. Ensure that every year CbCR compliance is being reviewed consistently, and thus you ensure you are compliant and avoid any tax penalties.